Hey, I hope you're doing great. Hope you're finding the weekly rate updates useful. Just want to take a couple minutes to go over some of the differences between Fannie Mae and Freddie Mac. I included that in last week's rate update and also again this week. So with Fannie Mae, they'll allow up to 10 finance properties. They also made a pretty big change for bankruptcy and foreclosure requirements back in August. So if somebody had a mortgage that was included in their bankruptcy, we can go 4 years from the date of discharge versus the normal foreclosure waiting period and going off of the trustee's sale date. So again, 4 years off the date of discharge when a mortgage was included in the bankruptcy. Fannie Mae also allows for limited condo review on owner-occupied and second home transactions where the borrower is putting 20%, at least 20% down into the transaction. What we're looking for there is just getting a condo questionnaire form filled out by the association, make sure there's no pending litigation, and then also a copy of the master insurance policy just to make sure they have the right insurances in place to meet the Fannie Mae guidelines. Fannie Mae also allows for rental income to be used on the purchase transaction. If you have somebody buying a rental property, then we have the appraiser do a rental survey or a 1007. We can use 75% of that figure to help offset the new mortgage payment. No rental history required, anything like that, versus Freddie Mac where they have the rental history requirement and they don't allow for future rental income to offset the mortgage payment. Freddie Mac, a couple good things about Freddie Mac. They allow for blended debt-to-income ratios for non-occupying co-borrower or co-signer. Basically can use all the income to help qualify for the new payment. Future employment income can be used when there's an employment contract in place. We can close within 60 days of the start date of the contract as long as there's no contingencies in the contract. So Freddie also allows for a little bit higher debt-to-income ratios than Fannie Mae. Fannie Mae usually cuts off at a 45%, where Freddie, with the right profile, sometimes you can go closer to 50%. And then Freddie also allows for higher loan-to-value percentages on adjustable rate mortgage than Fannie does. One success story this month, just kind of keeping with the difference between Fannie and Freddie, had a detached condo, received the purchase and sale on October 28th. Inspection contingency satisfied, and we ordered the appraisal on November 3rd. And then we had the initial underwriting completed on November 5th, rounded up the association documentation, and the association wouldn't meet Freddie Mac guidelines, so we were able to switch it over to Fannie Mae guidelines, underwrote and sold directly to Fannie Mae. And some of the bigger banks, maybe even some of the companies in the area that only underwrite to Freddie Mac wouldn't have been able to adjust anything with the association to get the association approved with Freddie. So it was great to be able to switch them to Fannie Mae guidelines, get the association approved, and just move forward with the transaction. So on this particular transaction, we, like I always mentioned, we aim to have documents out 1 week before closing. We had documents to escrow on the 11th business day, even with Veterans Day in there. Had documents out 1 week prior to closing. Gave escrow enough time to get the appointment set up, and we avoided the end of the month rush, so we weren't trying to get documents out on Monday to close on Wednesday and get everybody signed Monday afternoon or first thing Tuesday. So just helps keep everything nice and comfortable towards the end of the transaction. Gives escrow enough time to get appointments set. Another thing coming up at the beginning of the year, Fannie Mae and Freddie Mac increasing loan limits for King, Snohomish, and Pierce counties. So you can see here one unit, they're going to adjust the loan limit up to $517,500 from $506, and you can see 2 unit going to $662,500, 3 unit $800,800, and a 4 unit up to $995,200. So these are for your conforming high balance programs. Minimum 10% down requirement on those, so increased loan limits coming at the beginning of 2015. Other than that, I hope everybody finds this video useful and has a great Thanksgiving. Any questions, definitely give me a call. Number's 425-698-2917. Happy Thanksgiving.